Bitcoin loaded like a spring, and most traders are still bearish. Funding rates are neutral. Plus, Ethereum is starting to flex really hard. What's going on? Is Ethereum headed to 10,000? That target could be closer than you think. Let's break it all down. Welcome back, Crypto Crew. It's your boy Tom here, bringing you the hottest in Bitcoin and crypto action. If you're ready to dive into today's market analysis, make sure you hit that like button. Make sure you hit subscribe if you haven't already. And don't forget to follow us on X, where we talk about crypto and Bitcoin all day, every day, 24 hours a day. All right, let's start off, man. We are sitting right at that support level that we've been talking about. I'm going to get into all that. Oh, man, I'm so excited about what's going on. It's the weekend, so I know things are going to be a little bit slow, and that's fine. Right now, let's just look at the Bitcoin funding rates, all right? The Bitcoin funding rates are right around, what, 0.01%? Completely neutral. What does it tell us? Despite being just a breath away from the 109.5 or 109.8, the majority of the market is still short or bearish. Now, this is exactly the kind of disbelief rally that we love to see. If you look now, I'm going to look at the liquidations. Look at these guys, man. They're putting up liquidations. Now, this could be profit taking, and I can understand that. But if you're thinking about going short here, I don't know. I mean, we could get a pullback. I'm going to discuss that right now. But look, liquidity is sitting at 104, 208 right now. And what does Bitcoin generally do? It generally gravitates to liquidity to grab up that liquidity. Now, we just annihilated 3 billion in shorts just yesterday. Okay, when the market, when Bitcoin rallied up past 100,000, we ate up all those shorts. So, this is a classic wall of worry behavior, really, for the short term. I mean, guys don't want to hold on, or gals don't want to hold on to profits, which is a problem. I mean, if you look at it, like if you're long and you're making money and the market's not giving you any indication to get out, you shouldn't get out. This should be all blue up here right now. I mean, but that's good. That's what makes a market, buyers and sellers. But let's get into the 1 hour chart right now. All right. Let's talk about the 1 hour. All right. We're spotting another bullish flag pattern, very familiar to the ones that we called out before this major breakout. Let's go back in time. Let's look at this. You see this? This is 1 hour. Same type of similar structure right here. We had a bounce back down to the support level at 95. Let me move it down right there, make it look good. 95.9. Marketplace broke out. We talked about, the candle before the breakout was a down candle. This was good. This is a good breakout right here. Now look at what happens right here. Okay, marketplace comes up, comes back down. We're flirting with the 102,500 high days close. I told you this is a very, very important point, in my opinion, okay? Because what happened here was after the market made an all-time high of the 109,588, it got smashed down and closed at 102,500, a significant drop from the high, okay? So right now, long-term traders that got short, that didn't cover. Now I'm talking about big whales. All right, you got to remember there's a lot of different hedge fund groups, right? Not all are BlackRock and Fidelity. There's a lot of other ones that don't have as much notoriety, but yet they have positions. And if they were foolish enough not to cover their shorts at lower levels like the 88,000, or I'm not going to say they should have got the ultimate low. Who could have called the ultimate low at 74,508? I mean, if you did, you were extremely lucky. If you do it all the time, congratulations, you are a god. I was going to say Forex trading god because I am a Forex trader primarily, but you are a crypto god. But congratulations. But anyway, right now price is consolidating above the 102,500, which is a very, very important price. Okay, That's key. Holding the level could be our new base before lift off. And price action is tight right now. It's a weekend. It's showing signs of potential bottom formation in this critical area. Now, we have the flag pattern, and we're sitting right up at like 103.5. All right. Now, as a technical trader, we could actually come down and actually seep down to like 102, 101. Hopefully, we even get down to like 100. That would be really cool. And then do a classic spring trade back up through the lows to attack the high. No, it might not happen. Bitcoin right now, it's extremely bid right now. Excuse me. So we might not get that reprieve to the lower support level, but we're sitting right now in the pattern. And the breakout's going to occur at that 104. That's where all the liquidity is sitting anyway. Like right here, all the liquidity is sitting up top there, and Bitcoin's going to try to attack that liquidity. Now, if it does and can get and close above it, we got a good chance of getting to our secondary target at 107, 100. Okay, so now technicians here think that we're going to get a reprieve from the 107, 100 back down to potentially 102, maybe 101 again before the market really takes off and goes to that Everest point. So I want to look at the Bitcoin Wyckoff structure, okay? We take a step back, we look at the daily chart. Now, I want to talk about something also. I got to remind myself. People talking about Fibonacci, which is great. It's a great trading technique. But my technique in fibs, and I'm going to just show you really quickly. All right. What I like to do is, if a marketplace it makes a high, okay, what I like to do, hang on a second, let me get this bloody thing off. It's just a quick little idea lesson for you. What I like to do, if a marketplace makes a high, I like to actually go back to the last time the marketplace traded higher or at the same price. So I'll go back in time and I'll say, oh, look, this area right here was higher. What's the lowest point in between this point and this point? Well, it's these points right here. Okay, so my Fibonacci basically retracement would go from this high down to this low, and I do it manually because I'm just like an old guy. I would take the 97,732, take out, subtract 93, 377, and then throw up fib levels multiplied off of the difference between the two to get resistance levels on the way up to actually see if we're breaking. Now, why do I even bring this up? I bring this up because if you look at the daily, right, when we made the all-time high of the 109, where is it? Right here, 109,369 in this chart. I got 109,588. If you went to the left, there was absolutely no place to get a reference, another high, because this is at all-time highs. So what do I do with my method? Do I throw it out the window? No. What I'll do is, okay, I got 109,588 as my ultimate high. And, I got nothing to find a bottom against to draw to kind of get fib retracements. What I would do is I would take the 109,588 and I multiply by 0.382, the first retracement level down. If I did that, the difference between them, let's see, I think I did it already. I don't want to redo it again. Yeah, I did. Let's see. Okay, 109.5 less 74.5. I came up with a retracement level at 382 of 41,862, which if I took 109,588 and I subtracted 41,862, I got a level of 67,726 as a 3.82 retracement level. I want to just go down to the ultimate low that we had. Ultimate low was 74, so it did not make the 67,000. What did I say it was? 67,726. 67, like right here. 67.6. It didn't make that level. So that was actually showing some strength. However, I'm not going to say I wasn't thinking that we could get a pullback to 70 or even even this level at the time, because the marketplace was extremely bearish. There was so much negative news in the marketplace. But once the market rallied over, say, 81,000, 82,000, kind of gave a reprieve. I knew that we needed to get over 88.7 to really show, okay, perhaps a bottom is in. There's always like a critical price juncture in a marketplace that basically says, okay, maybe the bottom's in. You can never say, yeah, the bottom's in for sure. I don't do that as a trader anyway. But anyway, I just wanted to talk about that. But right now, as we're talking about the Wyckoff structure, all right, the reaccumulation structure, we're watching Bitcoin right now attempt to finally jump over the creek. And we are close to it. It's happening. The market is actually starting to jump across the creek to get into the sign of strength area. All right, so what's the key to this? Right now, it's moving through previous resistance with conviction. The guys that are trying to sell 104s, I think it's a mistake. But hey, maybe they'll be able to get them back at 102. Like I said, that we have that descending line that perhaps we can go back down to. That would be great for people that missed the opportunity, or they're looking for discounts. That basically, I think your 100,000 101 is your major discount at this point. But anyway, it's starting to move through previous resistance with conviction. The next step is the sign of strength, which is what I just pointed out right here. Okay, so sign of strength, what does that mean? It means that basically the discounting is over, and it's really where increasing volume to get across the creek happens, and the volume is increasing. We're starting to get over this high right here. Once we start really moving up the volume, this is really going to accelerate to get us into the sign of strength, meaning discount prices are over, and it's driving price to price discovery again at higher levels, creating higher lows, higher highs, higher lows, higher highs. So, that's exactly what we need to see, and I'm really happy to see it. Now, let's switch gears really quickly to Ethereum. All right. Ethereum, all righty. It has recovered nicely from that, let's say 1,500, okay, from that 1,500 level. It's now gathering strength to attempt to break above 4,000. That's the next big psychological and structural level. Once that flips to support, we're looking at a much broader move upward. Long-term target for Ethereum, 10,000. It's not going to happen overnight, but the setup is there. Accumulation, recovery, rising strength, and now, the break of the 4,000 is what we need to check off next to actually find a pullback. I do think that, 4,000, if we can get through 2,800, that's the key point for me right now. Let's close above 2,800, 2,900. And then, maybe we could get a slight pullback to 24 and then the rally. So I think really the key point right now is 2,800. If a break of that, a close above that on, say, a 4-hour basis, actually shows that it's gathering strength. All right, before we wrap up, crew, I want to make sure that you are aware of our crypto trading community. I don't know why this thing always wants to do this to me. Somebody's got to teach me how to stop this bloody YouTube from resetting. All right, so just this is a totally free thing to join. I believe Merlin has started it already. You click this link, you get taken over to this site where you could join the wait list. I thought that he already opened it. I'm not sure. But anyway, this is a totally free where we'll be dropping insane alpha and trading opportunities from breakouts to long-term gems. We got you covered in here. We're going to be talking about technical analysis, man. Technical analysis. For those of you that really want to get deep into the weeds, we're going to do it. You want to follow us, our trading, check out our preferred broker link right here. Perfect for our executions. Low fees, fast execution. Join the crew, level up your trading. Let's stack those profits together. All right, so we covered Ethereum. We covered the short term in the Bitcoin. What I wanted now from you guys is I want to hear your thoughts. Leave them in your comments. Smash the like button if you found this valuable. Drop your comments, man. Get involved. Let's get involved here, okay? And remember, always follow us on X so that you don't miss a beat. We're always talking about crypto. Merlin's live right now. He's in a trading tournament. I hear he's doing really well. So let's wish the guy luck. Let's hope he presses on the gas. Let's hope he just smashes it. All right. So as a short-term trader, what do? You enjoy the party, but you dance in the door. As a trader, you always do your own research. These are just my personal opinions. And remember, trade with your head, not over it. Don't put the rent money or the milk money on the line. Trade smaller. Look forward to seeing you in the next video. Cheers.